Australian dollar is the only currency in the more actively traded currency basket that is up against the buck since the weekly open, and only marginally in that. When we talk about the actively traded currencies, we're talking about the major currencies and the commodity block currencies, Aussie, Kiwi, and CAD. The relative strength in Aussie had been reconciled by some encouraging gestures on the China-US trade relations front and a concurrent uptick in equities, though already into Friday there have been headlines about the US administration wanting China to do a lot more. China data has also come in soft and stocks are right back down. At the same time, while the other currencies are lower against the buck, perhaps this is somewhat misleading, with the setbacks rather marginal. The euro isn't really going anywhere and will need to get back above 115 to suggest we're really seeing a change to the outlook. But it's definitely something that should be considered after the major pair has already seen a lot of downside in 2018. The market is trading just off the 2018 low in the 112s after trading to as high as 125.50 earlier this year. There wasn't anything to really talk about with respect to Thursday's ECB decision, which basically went off without a hitch, with the central bank saying it would stop net asset purchases at the end of December while lowering 2019 inflation and growth forecasts. Meanwhile, we're waiting to see what comes out of Theresa May's attempts to work out a deal that will have a chance of passing in her government. Looking at the Friday calendar, key standouts come in the form of German and Eurozone manufacturing PMIs, U.S. retail sales, and U.S. industrial production, along with U.S. business inventories. Earlier today, the BOJ's Tankin survey produced a weakened outlook and could also be adding to Friday downside pressure on risk assets. That's all for now.